FM, Paula Abdul there, and Morning Dave here. Glad you're with me this morning. I appreciate it. It's 8:40 now, 20 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time to check in on your money with a financial advisor you can count on. Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well today. It is, a little bit more than halfway through the month, and, the quarter's coming to an end quickly.
you always remind me how close we are to the end of something soon. But yeah, it's halfway through September already, and we start out the morning with a market that generally wasn't at all unhappy yesterday. Dow was up 49 points. That's not quite up to that all-time record we bumped our nose on. It's still under 46, but it was green. Standard & Poor's up again, another record, 31 points up yesterday. And NASDAQ is looking like it would like to see 23,000 before long because it was up another 208 points yesterday. Must be some optimism in that build-in for the plan for more rate cuts. I've got one thing saying the markets are pricing in 3 rate cuts by the end of the year, and it looks like at the very least the interest-sensitive stocks are thinking that way, aren't they?
Well, they are, Dave, and I'm not so sure that they're right, but they're pricing it in, and I would hate for disappointment to come in December. Or I guess it could come in October too. But that's one of the things that the interest rate sensitive stocks, well, they're benefiting with that expectation that we get 0.75% decline in interest rates. Maybe we will. I'm just not 100% sold yet, especially with some of the economic numbers we see today.
Absolutely. We're looking at an economy right now where the Fed is trying to balance its 2 goals. Number one, keep employment stable and at a controllable pace, and at the same time controlling inflation. Our inflation numbers haven't been looking like they're heading down toward that 2% goal, but unemployment is starting to get on the hinky side in the process. And then you have to mix in the political side of the step. Step number one, President Trump's been out on his social media account saying he expects a big rate cut in the Fed meeting today that starts today, and we get the report tomorrow. And we've got another variable in there. Stephen Moran, his chairman of the Economic Advisory Council, has officially taken a leave of absence, and he's in on the vote today. So one more vote in favor of a big rate cut is going to be in this thing as well. Somebody yesterday, while I was soloing, saying that they were expecting a couple 3 written dissents on both sides of the argument. Couple 3 maybe saying we shouldn't be cutting at all. Couple 3 saying we should be cutting to the bone on interest rates. Boy, if it made a little bit of news with a couple of dissents last Fed meeting, you imagine having 4 or 5 written dissents coming out of this one. It is not going to be a cohesive group, is it?
No, I think there's going to be some arguing and some bickering and some, laying it all out on the table as to why we should or why we shouldn't be, lowering or keeping interest rates the same. I think if you look solely at inflation, you would not budge on interest rates, but you have to factor in the job losses that we've had and the economics of that, and that makes it a little bit harder decision.
It's that balancing act I was referring to because we got two completely different economic challenges, and they require different treatments if you're going to try to do it by monetary policy, which I've ranted about over the years, that as long as Congress isn't willing to help out with fiscal policy, we can't run the entire economy on monetary policy, and now we're sitting on that exact cusp right now because we're stuck with the Federal Reserve trying to fix some stuff that really Congress really needs to cut, and it's not ending up doing any good whatsoever. Plus, we've got the political pressure on there from President Trump. And the indications we got this morning as far as inflation is concerned, if you look at how much we're spending in retail sales, we spent an awful lot more money in August than we thought we were going to, didn't we?
We did. I mean, retail sales, I'm going to say, hit it out of the park versus expectations, up 0.6% overall. And I know your expert said it was going to go up 4 tenths. My expert said it was going to go up three tenths. Either way, they were wrong, up 6/10%. So that's a huge increase in retail sales. And you got to wonder with all the, unemployment, going up, how's that happening? And it's got to be plastic, Dave.
I've got to believe it's plastic, given the job numbers that we're seeing in the process. Got to get the other number that comes in, the retail sales. Once you pull autos and gas out of there, generally, price increase on the price of fuel, that bumps it up. Well, it hasn't been going up, but automotives are always a big number in automotive purchase. They were expecting a 0.5% increase, according to my number. We got 0.7%. So we were buying sundries and regular consumables like they were going out of style during August, and that indicates, like you say, probably a lot of burning plastic. It also means that we aren't, either we're getting desperate or buying more anticipating tariffs, or we're just simply spending like drunken sailors, and I'm not 100% sure which direction it really means.
Well, me either. I mean, the other thing you look at too is that inflation has caused prices to go up. Well, if prices go up, then that means sales have gone up just by a function of inflation. It doesn't mean they're buying any more or they're buying something extravagant. They're buying their needs, what they need to have. And those prices have just gone up. And so that in
Which is
itself will cause retail sales to increase.
Exactly, which is why I said it was an inflation indication, even though it isn't a direct measurement of it. If we're spending more, it means either more demand, which is going to pull prices up, or we're simply spending more because inflation has raised the prices for the stuff that we need, one way or the other. Going into a Fed meeting where they're getting a challenge, it's kind of a conflicting set of statements. Other things going on today in the process between the retail sales report, little jitters over the Fed. We got word there might be a TikTok deal coming up. Are you relieved to hear that?
Well, I'm not much of a TikTok person, but I did see that, Dave. I did see that Oracle may be putting together some infrastructure type deal that it would be a consortium of firms that would enable TikTok to continue operations in the United States. And that's only if a framework deal can be finalized between the U.S. and China.
Absolutely. Gosh, you think poor little Larry Ellison can afford to buy TikTok? I mean, he just got that new statistic out as the richest man in the world. Do you think he could swing it?
Maybe. I mean, he's 4% richer this morning.
Which I'm still confused about based upon the promise of the future. Other things going on, like I said, the president is yelling loudly about wanting a great big interest rate increase. And you and I think we might have a disagreement on this. The other thing that the president is calling for this morning is he wants to see quarterly reports from the publicly traded companies go away and cut earning reports back to every 6 months. And he says it's so executives can focus on properly running their companies. You kind of had a qualm about that when I mentioned that on the phone before we went on the air.
Well, when it comes to our radio world here, it gives us one less thing to talk about, right? I mean, you can see this is September, right? And we're already down to the bare minimums of earnings coming through. And so leaves us less to talk about when it comes to companies.
And that's a point. I was simply working on the firsthand experience of working at a small publicly traded company for 10 years before I moved here. And at the end of each quarter, we were getting monster pressure to figure out how to boost our cash flow by another couple of percent. I got a directive from corporate one month to blow off some trade fast because it adds to the cash flow number. Basically, it prompts companies to need to run things for the quarterly report that comes out the end of quarter instead of what the right thing to do for the business and the business's customers are. So I kind of looked at that statement from the president and said, it might actually be a good thing for business in general if they only had to report twice a year.
And it would be. I mean, it would take off the pressure to meet those quarterly numbers. And so that could be a good thing. They could, like the president said, it could focus on doing business and not meeting shareholder expectations, which would probably be a good thing. And I've always heard less is more. So less reporting may benefit more to the individual companies.
Unless, of course, you're NVIDIA, where your stock goes up 25% as soon as you report it. There's exceptions to every rule, I suspect. I don't have much at all as far as earnings reports are concerned, and I didn't have a chance to ask you, is there any company news that might affect the market today?
So I do have one, and one is Dave and Buster's reported,
Hmm.
and it was a dismal quarter, Dave. They missed on earnings by more than 50 cents a share. Came in at 40 cents, was expected to be 91 cents a share. Revenue missed by more than $5 million on estimated revenue. And they're getting beat up this morning pretty bad. They're trading down 17.75% this morning.
That's enough to ruin your whole day.
Yeah, it's
I
just one of those things. Yeah.
Absolutely. Resetting the table for the morning. It was a green day on the equities market yesterday on Wall Street. I'm not sure I like what happened to the price of commodities in some cases, but 45 minutes before we open this morning, what are we looking at today anyway?
Yeah, it's a mixed bag, but nothing bad. Too bad anyway. The Dow is down by 0.05%, less than $25. The S&P 500 is up by a little over 0.1%, as well as the Nasdaq 100 up about 0.2% this morning. On the other side of the coin, we got silver bumping its head up against a 52-week high right now. It's at $43.25. I think if memory serves me right, the 52-week high is $43.35. So we're 10 bucks away, or 10 cents away rather, from a new 52-week high, which puts him up 0.7%. Gold's up a little over 0.2%. Crude oil's up 1.3% to $64.12. And I saw a big jump at the gas pump coming to work today.
Yeah, I was going to say I was kind of I saw that and I was thinking I'm kind of glad that I gassed up on Sunday when gas price was under $2.90 a gallon, and I know I didn't get the lowest price in town, but I was just happy to see $2.88. Not for a few weeks anyway, until they get their poop in a group there. Overseas markets, the Asian Rim market generally in pretty good humor this morning. Everybody closed up. The mainland Chinese markets were up fractionally. One of them was almost 0.5%, the other one about 0.4%. Over in Europe, they're worried about Ukraine. They're worried about the shooting in the Middle East. And with their central bank holding steady on rates, they're a little leery about what our Federal Reserve could do, too. The average European index down by about 0.25% halfway through the European trading day. Getting my retirement together and being able to plan it instead of gambling as to what's going to happen in the markets every day, that just makes good sense. How do I find you to get the gambling out of my retirement?
Dave, that's why I developed the core retirement design to help people design that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back together again tomorrow morning here on Light FM. Phillip, thank you so much, and we'll catch you tomorrow, all right?
All right, man. You have a good day.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.